Crypto gets even more dicey as the America Competes Act brings some drama into the crypto space via fear, uncertainty, doubt, the unknown, Cardano on the brink of a new lower low, and what's up with multi-pool operators in the Cardano ecosystem. What's up everyone, welcome to Crypto Capital Venture. Thank you so much for cruising by. Thank you for watching the video. Please hit the subscribe if you're not a subscriber. Hit that like button as we grow this channel. It means a lot to me. These are the Cardano charts. We're going to talk about them. We're going to dig into them in a few minutes. First off, this is important if you're looking at any chart in crypto. I don't care if it's Bitcoin, Cardano, any altcoin. This is important stuff to pay attention to. Included in the America Competes Act just introduced in the House, and which will very likely pass in some form, is a provision that would be disastrous not just for crypto but for privacy and due process generally. The so-called special measures provision would essentially give the Treasury Secretary unchecked and unilateral power to ban exchanges and other financial institutions from engaging in crypto transactions. And it goes on to talk about how it will do that. Bank Secrecy Act allows the Secretary to identify a primary money laundering concern and take special measures to require financial institutions to report information on the concern. This goes on. It requires multiple things currently, right? This is an important part of the thread. While not full due process, these limitations that are in place now at least alert the public and gives the public some opportunity to comment on a special measure's merit or constitutionality. The new provision would do three things: add certain transmittal of funds to the list of things that can be banned by the Secretary, eliminate all public notice and comment requirements, eliminate the 120-day limitation for measures imposed without regulation. That is extremely important, and to explain why, very eloquently, very briefly and quickly, I'm going to leave it to Charles. This is what this means.
And if this is passing, it would give Janet Yellen, the Treasury Secretary, the unilateral authority to indefinitely ban all cryptocurrencies in the United States, with no public hearing, no checks and balances, no say. Just wake up on the wrong side of the bed and say, you know, that crypto stuff is real bad.
Wake up on the wrong side of the bed. It's all it takes. One person, just one person, that full authority and power to do that. This is a big deal. You can really see how that lends its hand to the fear, uncertainty, and doubt in the crypto space, particularly on this very day, particularly on top of everything else going on in the world and the economy, and you know the fear of rising interest rates, things of that nature. This is just one of those things on top of it all. Jerry ends his thread, "It's time to call your member of Congress and ask that they take action to make sure that notice and comment and duration limitations are not removed, as the America Competes Act would do." It's important, and especially important when we're looking at these charts and we're just in a downtrend, pretty much on all charts. Here's Cardano. We're in the downtrend. That capitulation environment, it could happen very quickly. So you want to be prepared for it even more so. Be prepared for that downside. Now, things like this can flip really quickly, right? We could get a win here, and then crypto's all of a sudden bullish again. So this is not a new story. There always are these headlines. There's always these things happening in crypto, whether it's regulations or something else having to do with China. There's always these headlines. In the moment, looks really bad. But when you zoom out on the longer term story, all those headlines throughout, you see this uptrend in crypto. It's very difficult to identify the exact bottom, but you always want to be prepared for it. Let's talk about the charts. Let's start with Cardano here. This was a tweet from earlier. I said that's a Cardano weekly candle right there. And that is what the candle looked like. I mean, I took a quick snapshot because who knows how long it would last. It did not last very long. What's funny is David tweeted, and he said, in Dan's voice, "We still have 4 days and 10 hours to go. Let's see how this plays out." Because that's exactly what I would say. That's exactly what I'm going to say when we pivot over to the weekly chart. So here's the weekly chart. Not the same exact weekly candle that I tweeted a photo of, obviously, down around 3 cents. It was, I think, $1.12 when I tweeted that. Right now, back in the red, $1.09. But this really is true, as David said. Let's see how the week ends. This is what I'm watching on the weekly chart. There's one other thing That's extremely intriguing to me. Really one of the only things that matters to me right now on the macro. But here we go. 4 days, 6 hours left of the weekly. Let's see. We see this upward buying momentum, this upward pressure here in this wick on the weekly, even this last weekly candle. Same kind of thing, but we had downward selling pressure as well. But oftentimes we get these long wicks to the downside when Cardano or any altcoin or Bitcoin is bottoming out. You can just zoom out on a chart and kind of just get a glimpse of it anywhere on the charts as you zoom back. I mean, here's last November, December, you see similar wicks. So not saying we're bouncing here definitely to the upside, but in terms of the pain of the downtrend, I really think the worst is over. We enjoyed the gains, and then this part just entering into this huge dip, that's probably the most painful part. It's like the Band-Aid being ripped off, right? It happened already. Now we're just ready for more downside, especially as people kind of think that downtrend is the only direction to go, right? That's that fear mentality really entering the markets right now, that desperation, people giving up in crypto. That's usually when the doors of opportunity open, right? And so that's kind of where we are. And I think the RSI on Cardano illustrates that. This red line on the slower moving momentum oscillator, historically, this is data driven. This is not an opinion. This is not financial advice, everybody. None of this is. I'm just tracking the data with you. But historically, when you look at these charts, Cardano in this area on the RSI, this has been a bottoming out area. Whether it consolidates for weeks or months, it's been a bottoming out area. And in terms of opportunity for accumulation, it's way better than something like this, overbought, that's for sure. But you can see back in 2019, it consolidated. Before that, it got the bounce before that COVID swing low to the same area. And then the bear market low, same area on the RSI. I know I talk about it a lot, but it's a very important reminder. It's an area on the charts I forget about until I open it. I'm like, oh yeah, let's watch that. Let's keep an eye on that. Let's actually realize how potentially good of an opportunity this is as we dig into the charts from that weekly, and we see Cardano. We have some targets to the downside. Maybe Cardano hangs out in that lower trend line, or this red lower line area, 35 on the RSI or so, 35, 36. Maybe it consolidates down here for a while. That could bring Cardano lower. But as this is happening, and we have targets like 80 cents down here from that rising broadening wedge that we've been tracking. We have a 50-cent target outside of the symmetrical triangle that we've been tracking. These targets are in play now. That $1 to 50-cent range I've mentioned, for me, is a very intriguing area of accumulation. Extremely cheap Cardano, in my opinion, comparative to what I think Cardano is worth, what I think Cardano will one day be worth, right? We have, just for quick context, $15 Cardano, $500 billion market cap. That's achievable. $1 trillion market cap for Cardano. I truly think that's going to happen in the future. I'm not saying a month from now. I'm not saying a year from now. I'm not even saying 2 years from now. I'm just saying that is possible. So in the macro scheme of things, 50 cent to $1 Cardano, yeah, that seems pretty powerful, especially when the data lines up that it's a good area. So that's what I'm watching. On the daily chart, it has been a story of lower lows. It has been a story of Cardano failing below these moving averages, the 50-day moving average, the 20-day moving average. A couple fake outs. Here was one back in November 2021. Here's one in January 2022, meaning we got the move to the upside. I did a video in that swing high range, and I said, don't be surprised if Cardano revisits these moving averages to test it for support. Maybe a bounce to the upside to get that 20-day moving average back above the 50-day moving average. Did we get that bullish confirmation, the support at those moving averages? No. We got more of a bearish confirmation, a very quick break below the moving averages. Cardano has failed in this midterm downtrend to see support above these moving averages. I think it'll one day happen. The question is when. We have to just keep monitoring it and just being ready for it and just waiting patiently and formulating our own plans based on the current downtrend that we're in and anticipating further downside at all times. I really think the ship will turn around eventually. Nobody knows exactly when, right? So that's Cardano on the charts. That's what I'm watching right now. I want to pivot. I want to talk about stake pools. Just a candid, laid back conversation with you all. I've been very, very open since I really started the stake pools, and I said, listen, this is a revenue arm of Crypto Capital Venture. I've been extremely open about that. Cardano blockchain provides that opportunity as an entrepreneur to do it, right? There have been a lot of, and here are my stake pools, by the way, there's 5. There has been a lot of conflict, a lot of disagreement, and some of the time it's gotten very ugly. I've personally just been under attack since I've opened multiple pools on the staking ecosystem in Cardano. I'm not saying that to make anybody feel bad. It is what it is. I've gotten used to it. It's taken me some time to get used to it. But I want to say this. There are disagreements with single pool operators, multi-pool operators, disagreements about what's decentralized, what's not decentralized. Single pool operators say multi-pool, not all single pools, but multi-pools take away from decentralization and they don't care about decentralization. It's just a back and forth. I want to say this though. The last couple weeks or so, I've started to see a shift in conversation and dialogue. There's still a lot of clashing. There's definitely still a lot of clashing, but I see a shift in dialogue, and I think that's good. And all I want to see, because I don't have answers. This video is not about answers. It's not about the solution. I have some ideas, and I want to talk about that. But all I want to see is civil, respectful conversation. First off, it's cryptocurrency. It's a matter of, hey, I don't think it's decentralized. You're making it centralized. That's the argument. It's not that serious to the point of insulting people and personally attacking people and their values and their faith. I get attacked all the time because I'm a Christian and have multiple pools. It should not go there. It's wrong. And all I want, and I encourage the community, is to have just a respectful dialogue. And I've seen that starting to happen, and it's been encouraging and awesome to see. And for me, it kind of just naturally brought my defenses down a little bit, which is why I want to kind of start having this conversation. I don't want to be on the defense all the time. And I want to talk about this entire scope of stake pools, right? So I want to start real quick. This is a thread by Peyton. He was replying to another thread. Not going to get too deep into it and the context around it, but he made some points I want to pivot off of. He said A0 parameters broken. Pledge is supposed to limit the number of pools. It doesn't. We pledge 1 million. He pledges 1 million per pool to protect against Sybil attacks. It'll take multiple years to make the ADA pledges back. The way to solve the centralization issue is limit the amount of ADA one entity can have delegated to their pool. The only way to do it is with pledge. There's nothing else in Cardano to limit number of pools other than ADA or KYC. This isn't a new issue. This is something that we've raised to IOG for over a year. The 340 ADA fee hurts small pools as well. Also hasn't been changed. Peyton, good dude, is basically kind of on the defense, just talking about his view on multi-pool, but also talking about the parameters within the Cardano ecosystem which allow it, number one, but also how IOG hasn't really made many changes to offer much solution either. So that's kind of what he's talking about. I just wanted to put that out there for context. Now, Conrad at Blade Pool, this is a guy that has pretty much, I think, a saturated pool, but he's very much in line with, hey, there should only be one pool per operator, right? So he's very much on the side where he thinks that there shouldn't be multiple pools. But I love the way that he dialogues with the community, and even with people like me who have multiple pools. I've been just seeing a lot of his comments, and he says here in this thread, somebody said MPOs, multiple operators, will come in here saying parameters, man, parameters, or it's just business, right? This is some of the things that I say. This is a business model. Parameters are important. These are things that I say. And Conrad says, it's in their right. Many of them are close friends of mine. I approve their business decisions and hope they approve mine. If the community wants to correct this, then allow us to run single pools with higher margins. It's again up to the community to decide. But please don't pin this on multiple operators. They're doing what the protocol was designed to. The responsibilities with the community to stake where they see fit. It's the community that can decide to stake in other pools. Many multi-pool operators are my friend and will continue to be my friends. Kaizen Crypto. I believe multi-pools are a reflection of the current parameters and incentives. If we want fewer multi-pools, then we need to adjust A0. With an increased K without A0, you would only encourage further pool splitting. The list of people includes mostly content creators. He goes on, I have multiple pools along with my colleagues because I've earned the delegation, have skin in the game, provide the value. Am I concerned about decentralization? Yes, but everyone will have a different answer of what that means. And with what I just read from him, I'm on board with that. That has been my view. I've said that often. I've been just kind of growing alongside of all of you, especially in the Cardano ecosystem, the CCV community, the Cardano community. We've just been growing, learning, building. And I've been providing my pools for you to delegate to. Now, with all of that context, a lot of it obviously is kind of in my favor. It's in favor of my view about Cardano stake pools, right? And multi-pools. It's in my favor, everything that I just read. I'm not reading really the opposing point. Maybe that's for another video. Maybe it's for a dialogue that I can have with people that disagree with me. But here's what I do want to say. Over the last month or so, I have realized, I think there's at least one thing that I could do to help or to at least make a difference. And it's to start just speaking openly about it like this video, but it's also just to educate, right? It's just to throw out the information. Maybe many of you are not even aware that there's a lot of people out there that think me, Dan Gambardello, and my CCV pools are taking away from decentralization. Well, I want you to know that. I want you to know that there are people that think that. Because at the end of the day, you should be educated about what's going on in the ecosystem. You should be educated about, the staking mechanism and what people are saying and thinking. The reason you should be educated is because at the end of the day, you have the power to choose what you do with your delegation. You don't have to stake with me. I'm not forcing anybody to stake with me. When you stake, you're not locked in. You can redelegate to another pool if you decide, man, I do want to be with a single pool operator. You can do that. Conrad said it perfectly. It's the community that can decide to stake in other pools. And it's true. And that is what decentralization looks like, right? It really is. It's a perfect picture. But I think what I could do is educate. I think what I can do is really, in my platform that I have as a content creator on YouTube, is just talk about, hey, listen, there's a bunch of single pool operators out there as well, and they're doing big things, great things. But I want to say I'm not going to stop having multiple pools because of the disagreements that are coming at me or coming my way. I'm not going to stop because I do not think that my pools are hurting Cardano. I really don't. Are the CCV pools opening up Cardano blockchain to a Sybil attack right now? No, I don't think so. There are projects like this I've come across, Stakeboard, stakeboard.net, redefine the staking experience, a social staking marketplace for the new economy, right? From what I gather, they're going to be spotlighting just pools all across Cardano ecosystem. I think this is a great opportunity for everybody out there to get just really nice, their interface looks like it's nice, going to be nice, to just get nice data on stake pools so that you can choose, right? I think ultimately you need to have as much information as possible in the staking ecosystem so that you can just simply decide what you want to do. Like, hey, Dan's providing me value in his content. I appreciate it. I'm delegating with CCV. That's cool. Hey, listen, Dan has multiple stake pools. I don't think that's cool. I don't think that's decentralized. I'm going with a single pool operator. It seems like places like Stakeboard will provide really good data on all pools, and you can just kind of get a sense of what's out there and maybe an initiative that you want to support. So this is where my head's at right now. I don't know where this is all going to go. I just know I want to see it respectful. It's so tiring to see the arguments about something like this. Life is so much bigger than crypto, everybody, especially life is so much bigger than pointing fingers because of decentralization versus centralization in a blockchain protocol. It's discouraging to see all the attacks involved with this, and hopefully we can start just having more of like a civil conversation about it. But again, from my perspective, I think what I can do is just let you all know what's going on, right? I can cover it. I can cover the news. I can cover the Cardano stake pool news. And that is, a lot of people are in disagreement, and you have the opportunity in this decentralized ecosystem that is Cardano to choose and to make your own decisions on what you do with your delegation. So those are my thoughts for now. Let's see what happens. Hopefully things, turn around on these charts, but we have to continue tracking it. Also have to continue tracking what's going on with this America Competes Act. But I appreciate you cruising by, everybody. Hit the subscribe and like. I'll see you in the next video. God bless.